Hey there, guys. Ryan here from Precision Trading Labs out of New York City, and I'm coming to you today. I wanted to introduce a little training my business partner did. We're calling it the option advantage. Another way to look at it is just I want you to hit and see the advantages of trading options versus just like playing stocks. So this is for you if you have a small account, you're interested in options trading, or you're just trying to like dabble a little bit and you don't want to like risk a lot of money in any one trade. So this is like perfect for you. So inside this series, there'll be a watch list, a bunch of ways to go through it. And my business partner is going to dissect 2 trades we gave our community, in our chat room from the previous couple of days or this week even. And he'll go through how he's found the symbol, why he's getting into the trade. We're technicians here, so we use price action to tell us where to get in. But then we do something what's called expressing the trade. So since we do a lot of option trades, in this case, you'll see there's the stock involved. You'll see it's a little bit more money, and then with a call or a put option, you can get in with a couple $100, less than $1,000 in majority of cases. So you can use very little buying power of your trading account, and then the risk is usually minimus. Our average trade is less than $100 if the trade goes against you. And then Mitch is going to take you through two successful trades. If you like what you see and the way we do it and our structure, it's been supporting us for almost 15 years now, and our coaching students, we've been coaching for almost 10. And if you like what you see and our style of trading, I want you to go to the link in the description or the link below the video, depending on where you're watching this. My calendar link will be in there. I want you to click it, pick a day that I'm free, and then pick a time that you're free that I'm also free, and you can schedule a one-on-one Zoom call. On this Zoom call, I'll show you some of the trades that we give our students, and then I will actually build a trade with you live and tell you how I play it. So I do them all the time. I do have a limited calendar availability as every day I get a little bit busier. So go ahead right away and click that link, schedule a call, and then I hope to see you on the Zoom. But for now, let me introduce my business partner, Mitch Firestone, and he's going to take you through the option trade that we did for our community. And with that, let me turn it over to you, Mitch. Thanks.
Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you a wrap-up of a couple of trades that our subscribers had during the past week. The first involved PLTR, which is a software company, and we're looking at a 2-hour chart here. And so what we identified here was a place where supply and demand went out of balance here, created by an exhaustion of sellers here. Right in here, we had a qualified demand zone here, and then right here, there was the exhaustion of sellers where price rocketed out of here. And so there was the expectation when price returned to this region, we would then be able to execute a bullish trade. And the way we were going to express that bullish trade was to buy a call. Okay, so that was the setup there, which was here, and then when price returned to this region, which occurred here on March 19th, we bought a call here. We bought the July 19th, 22 expiration. We bought a lot of time just on the off chance that we might have gotten stuck in the trade. Sometimes that will certainly happen. It turned out that did not happen here. We were in the trade for a whole 3 days. But what happened was we got in, we paid $3.85 was the premium. We got in at $23.20, which is the front door of this demand zone. And this thing ran up to about $24.95. So there was about a $1.80 pop in the stock. That led to a $1 increase in the premium of the call. That $1 of premium represented a 26% increase in that premium. And so if you had bought 5 contracts and ran that from $3.85 to $4.85, one would have made $500 on those 5 contracts. Okay, so that was the PLTR trade, and then the other one that I want to show you here is Mondelez. Mondelez, of course, is a food processor, and they make Oreos and Ritz crackers and Cliff bars and all kinds of other well-known products here. Again, right here, was an area where we had, again, this is the a 2-hour chart here, the 130 minutes, 2-hour chart here. And so at that point, what we had again was a demand zone, which again represented an exhaustion of sellers here. So right here, supply and demand were in balance. It then went out of balance here. And again, we were looking for price to return to this region in order to then again execute a bullish trade here. So if we would just bought the stock, we would have gotten it at 70.20. We set our stop at $69, about $1.20 below here. That is below the range of this demand zone if the trade does not work out in our favor. So we have risk control on this. But in fact, fortunately for us, price came down here. It basically kissed off the front of this demand zone here. And so we got in here on March 14th, and we were in this trade for about 8 days until March 22nd. When we got in, the premium was 475 at 720 at 70.20. We got out at around 72.60, and so the premium ran from about 475 to 620. That's $1.45 increase, and that 145 increase based on a 475 entry represents a 30% gain on that. And so we were in the trade for 8 days. That 145 premium, again, it was a 30% increase. And of course, had one bought 5 contracts, one would have netted a gain of $725. So there you go. There's our summary of those 2 trades. Thanks for your attention.